Friends, welcome to Hemant YouTube channel. Today we are going to learn the meaning of the cost price. We know that inventories are valued at cost or NRV whichever is lower. So as per INDAS-2, cost means all of you know this we have learned in AS2. Cost of purchase, that is invoice purchase, invoice price minus trade discount any. Remember here only trade discount, not cash discount. All of we know that what is the difference between trade discount and cash discount. Trade discount given at the for purchasing the goods, and cash discount is given while settling the amount to the debtor. So only trade discount is reduced, and non-refundable duties and taxes. For example, custom duty is non-refundable, it is added. And GST, we can get a credit, sometime we get a refund, so it is not added. And next, direct expense to bring the inventory to present location, transportation cost like that, etc. Next, this is the cost of purchase. Next, cost of conversion of that inventory. For converting, what we need? Labor expenses, we know, overhead expenses. So direct labor, production overhead, we know production overhead is divided into variable overhead and fixed overhead, and variable overhead is charged to this, and whereas fixed overhead, all we know, we divide total cost with number of normal production and into actual production, that we charge it to inventory. For example, cost is 10,000. 10,000 you think, 10,000 you 10,000 you think, and the normal production is 100 you think, but you have produced 80 only. So 10,000 divided by 100 is 100 into 80, 8,000 you are going to charge to inventory, and the remaining 2,000 is going to P&L account. So but what are excluded? Admin expenses. For example, there are admin department who sees HR related, who training costs, they will give the training to the employees, and they'll prepare the payroll, all that. These admin expenses are reduced. And selling and distribution expenses, for example, advertisement expenses, and giving some offers, giving some offers like giving pen for selling the goods. This all selling and distribution expense are reduced. And abnormal loss, any abnormal loss shall be reduced. For example, in your factory, one machine was not worked, due to that you got loss. That machine was worked out of default, that means you only did default. Due to that it has not worked, due to that you have additional 30,000 cost. This should not be included in the inventory. Next, storage cost, unless it is necessary for the production. For example, when you produce a tomato, it is necessary to store because it will stale, so storage cost are necessary. Next, borrowing cost, only when it is necessary include, when it is not necessary we have to not include. Next, borrowing cost, that is nothing but the interest expense. All of we read in A16, that is borrowing cost, shall be added to qualifying asset. If inventory is a qualifying asset, we add it. Next, other cost, expense to bring the inventory to eligible for sale, this shall be added. So depreciation, I have one doubt. Depreciation and amortization of this is there, of machinery which is used in the production, shall we charge it to this or not? Yes, we'll charge, because it helps in the process of production, so we'll add. Next, let us see an example. ABC Limited buys good from the overseas supplier. It has taken 1,000 units at rupees 1,200, and it is going to get a 5% trade discount, and it is going to get additional 2% cash discount if it is settled within 30 days, and the import duty is 60 per unit, and delivery cost is 5,000. All of you know cost is nothing but invoice price minus trade discount. So invoice price is 1,200, but it is going to get 5% discount. That is nothing but 1200 into 95% and 1000 units. So 1000 into 1200 into 95% is the invoice price. Next, this import duty. This is nothing but all non-refundable duty we have to add. So 60 into 1000. Next, delivery cost it includes. So 5000. So total cost equal to 1000 into 1200 into 95%, that is 11,40,000, and the import duty is 1000 into 60,000 delivery cost. So total cost of inventory is 12,05,000. Next, ABC. Next example, ABC Limited air conditioning systems. Each control unit requires the following. That it says that for control unit, for producing one, we need this one component X at a cost of 1205 each, one component Y at a cost of 800 each. Sundry raw material cost is 150 each. The company faces the following monthly expenses: factory expenses, energy cost, and selling and admin expenses. See, we know all this factory rent and energy cost should be added because they are uh, overheads, and the selling and distribution expenses shall not be added, and each unit takes 2 hours to assemble, so 300 into 2, and production levels are observed into units of production using hourly rate. The normal level of production per month is 1000 hours. So material cost is 1205, component Y is 800, and the raw material cost is 150, and 2 hours are needed for this is nothing but a cost of purchase, that is cost of, this is a cost of conversion. Labor is needed, 2 hours is spent, and 300 per hour, so 2 hours into 300, 600, and the production overhead, all we know, we have to divide based upon this normal production, total cost divided by normal hours into total hour. Based upon hours we have to divide, so the selling and admin expense shall not be included. This is, if you like my video, please subscribe, share, and thank you.